Number one, it's additional money for your family. That's the one thing that I tell people. You do not ever know what situation you're going to be in when somebody passes away. You may think you are all taken care of, but the additional money for your family immediately is pretty important. Second of all, it covers the funeral cost. And even people who say, well, I've already got my funeral covered and I paid for it 10, 20 years ago, there's unexpected expenses that come up that we are never really prepared for. It could just be families coming in, staying with you. You're buying extra groceries, or there's somebody now you're wanting to pay additional for whatever the situation is. Additional expenses come up. It has cash value. And that just means there's a portion of your premium, according to the amount of time you've had it, according to the interest that's paid on it, that's going to pay on your whole life policy, which is a plus. And I'll tell you why it's a plus, because sometimes we have clients that take out plans where they get their Medicare Supplement and whole life. We're checking on them in 4 years down the line. They're still able to get their Medicare Supplement and a whole life policy, but the cash that's been earned, which could be $800, $1,000, $2,000, goes back to them. And I've never had anybody say, oh no, I don't want that. They're always surprised because they forget, oh, a part of my premium's been earning money on it. Another benefit is, even if you have your life insurance all taken care of as far as funeral expenses, there are estate taxes that come up, and then it covers the estate taxes that you're not really calculating into the equation. And it pays upon death. There's no waiting period. The moment that certificate of death is presented to the insurance company, within 72 hours it's paid out. And the most important thing, I think, is that it protects you from unseen hardships. We never know what the future is going to hold. That is a fact. It's always good to be prepared. I know that when my husband and I were first taking out our whole life policy, and I've been here for 34 years, and I'll just be very transparent with you, I was thinking, well, at the time, we're not quite on Medicare, and we're paying an absorbent amount for our insurance. And I thought, well, can't we just wait until we get on Medicare? I mean, we've already got money in the bank, and the kids are grown. We don't have college funds anymore. We have investments. We're blessed. Our home is paid for. I mean, can't we wait? My husband, who is a finance major and works in annuities, said, no, honey. He said, we really can't, because first and foremost, we never know. In the future, we may think we have all this money in savings, and there's unexpected expenses, the cost, everything's going up. The gas is going up, the groceries are going up. There's unexpected hidden costs that come up. Taxes, we may be pulling from savings to pay over here, and the stock market could crash. You don't want all your investments liquid. And so even with my husband being in finance and the stable financial condition we're in, he said, you can't have too much whole life. I just talked to somebody last week, and I was going over these very points, and he said, you're absolutely right, because I've always made sure to it that I am covered well with life insurance, with long-term care, with everything I need. And as we spoke, he was sharing with me how, speaking of unexpected expenses, his wife has been diagnosed with Alzheimer's, and he's been paying $7,000 a month for a memory care facility. He didn't anticipate that in his future. And so when we don't know what's in our future, it's always better to protect ourselves in the present, so when the future situations and circumstances come, we're all taken care of. So this is just a few little pointers that I think is very smart for everybody in advance to take out a little whole life policy. And one other really important thing, the younger you are, the better off it is, because your premium never goes up in your lifetime. It accumulates cash value based on the amount of time you had it, based on the amount of your premium. So it earns that interest, and it never goes up. So it's smart, it's wisdom, and it always pays well. So I would advise this for anybody.